Oh man, I have so much fun recording these tips videos, talking to myself. All right, ladies and gentlemen, we're back bringing you another tips video. And in this tips video, we're going to be talking about trading with indicators and chart patterns. Now, this can be a very powerful tool in your trading, but the number one thing that we need to make sure that we do is the supply and demand is our main strategy. That means if prices is not inside our supplier in a supplier demand level, then we cannot buy or sell. It doesn't matter if we're bouncing off an EMA, a Bollinger Band, a Fibonacci line, or a loop-de-loop line, or a harmonics pattern. That is what we're covering today. This will work for when I talk about trading indicators or chart patterns, this goes for exactly what I just mentioned. Every type of chart pattern engulfing, I don't know, head and shoulders, support and resistance, EMAs, Bollinger Bands, Fibonacci, Elliott waves, everything, like all of those. We can use them to our advantage, but we want to make sure supply and demand or price is at a supply or demand zone before we buy or sell. That means if price is bouncing off an EMA, but we are not at a supply or demand level, then we cannot take the trade. All right. That goes for if we are sitting in a supply zone. Let's just say we are sitting in a supply zone, but price is not bouncing off an EMA. That means we cannot take the trade. It is very important that if you do decide you want to be using chart patterns or trading indicators, that you are very consistent with it. I personally don't trade with them, but if you do decide you are going to be using them on your chart full time, then you want to make sure that you are very consistent with it. You're going to have less trades, obviously, because you got to make sure that just say EMA. We're going to call it EMA. Because if you are in a supply zone, but price is not bouncing off your EMA, well, then you can't take the short. As for me, if I don't require that, I can look for the short. So you're going to have less trading opportunities, which is fine, but you're going to have better probability if you do get both on your side. All right. That's it. I just wanted to cover ground rules really quick. So let's just jump right into this. I'm going to take this snippet right out of the course that I created and talk about it because it works out pretty well. But let's start with EMAs or moving averages. So if we were going to be looking for selling opportunities, here, prices came up into supply. This was the supply zone. And prices were bouncing, off of the EMA right here. So when we were coming up into the supply, prices were coming up into the EMA. That would give us the ability to look for selling opportunities if you are using the EMAs and supply and demand on your side. It's very important that we keep the supply and demand as our main methodology. So here we are coming up into supply and prices were bouncing off of the EMA here. So that would give us the ability to look for selling opportunities there. As for this opportunity right here, let me just drawing tools. I think this will be better. As for this one right here, hopefully I'm not going too fast, but it's a very easy concept. As for here, this was a demand zone that I was looking to buy at down in here. Prices came back down into the demand, and I was looking for buys all the way up in this area. But if you're using the EMA on your side, you would not be able to take the trade because look, the EMA was way up here. You were going against the EMA. So for you personally, you would have not been looking for trades in this. Here's another example right here. Drop-based rally demand, prices worked, came into the demand, came up, touched the supply. You were not able to look for buying opportunities down here because you didn't have the EMA on your side. But if you are looking for selling opportunities here, you would be able to look for selling opportunities because you had the EMA bouncing off of your supply zone. So you had the EMA on your side and you had price in supply. So that would give you the ability to look for selling opportunities if you were the trader using the indicators or chart patterns. And this goes for every type of indicator. Let's just pull up This is when I talk about Bollinger Bands. Um, let's talk about it. So if you were the Bollinger Band seller, maybe you like to sell at the extreme of the Bollinger Bands, you would have not been able to look for shorts here. If you were a Bollinger Band buyer here, price came down into demand, we had Bollinger Bands bouncing off at the extreme here, so you would have been looking for buys here. You would have had the ability to look for buys, right? So it's same thing back here. We weren't really at the extreme, we weren't bouncing off of it. As you can see right here, we still had some room to go, so you might have not been the trader to uh, be able to look for buying opportunities. But maybe down here, you probably were able to because we were bouncing off of demand. We got a little reaction, and then we continued on to break it. So that was indicators right there. Let's quickly talk about chart patterns. This is a level that I talked about a long time ago, coming up to a year ago now. Here was the head and shoulders pattern. I'm on the Canadian chart of indexes. So here was a head and shoulders pattern, shoulder, head, shoulder. Price was coming up into the supply. This was supply right here, right? We formed a head and shoulders pattern right here, coming up into it. You had the head and shoulder sellers selling with you. You had price in supply, so you had a lot more sellers selling in here, and you can see by the big drop what happened. But if this head and shoulders happened and this supply was not here, maybe your supply was up here, then we would not be able to look for selling opportunities based on the supply and demand methodology because we would not be sitting inside supply. Whew, that was a big one. So that basically covers it. I think I covered it really well. I wanted to bang this out really quickly. Okay, so a quick recap. If we are going to be using indicators or chart patterns consistently with our analysis, we want to make sure that price is lining up with our supply and demand zones. All right, that's pretty much it. And if you don't require them, then well, you don't require them. I personally don't require them, so I'm going to have more trading opportunities, but they're probably going to be less quality because I'm not going to have other traders on my side. But that's pretty much it. I think I nailed it right on the head. That was a pretty awesome tips video for you guys. So I know it was a very requested tips video. Once again, if you're going to be trading at them, just make sure that you're sitting in supply or demand zones with the indicator or chart pattern on your side. Okay, I'm going to leave you go with that and have a lovely time. Bye-bye. Cheers.